Good afternoon, everyone. I'm Olivia, and I'd like to thank you for attending today's webcast. Today we'll be presenting Manufacturing and Distribution Global Tax Planning, Maquiladora Structure in Mexico. Before we begin, I'd like to review a few housekeeping items. First, we encourage you to ask questions. To do so, please send them to us using the Q&A box on the lower left-hand side of your screen. We will try to answer all of your questions during the webcast, but if a fuller answer is needed or if we run out of time, your question will be answered later via email. Second, to earn the available 1 CPE credit during today's webcast, you must listen to at least 50 minutes of the presentation and answer at least 3 polling questions. Please note that you must be logged in individually to receive credit for today's webcast. If you are attending as a group, only the individual who is logged in will receive credit. If you've completed the requirements, your certificate will be available for download at the end of the webcast. I'll walk you through how to download your certificate after the presentation has concluded, so please stay on the line. Lastly, you can download a copy of today's presentation from the green Resource List button at the bottom of your screen. Here you will also find our webcast Frequently Asked Questions, a document which offers some basic troubleshooting information and other useful tips. Again, this can be found under the green Resource List button at the bottom of your screen. Now, thank you once again for joining. I'll hand it over to Ryan.
Thanks, Olivia, and good afternoon, everyone. Thank you for joining Mazars' webinar on the Maquiladora structure. I'm Ryan Vaughn, a tax partner at Mazars in the US. I'm joined today with Jose Jimenez and Omar Garcia, tax partners, and Roberto Cantu, a tax director from Mazars in Mexico, as well as Tim Evans, a principal, and Aaron Alexander, director at Mazars in the US. Today, we will focus on the Maquiladora tax regime in Mexico, the Maquiladora structuring, tax savings opportunities under the Maquiladora tax regime, U.S. implications, as well as transfer pricing implications and requirements. And to start the webinar today, we're going to have a polling question just to understand everyone's familiarity with the Maquiladora structure. We have how many of you are familiar with the tax benefits of a Maquiladora? Yeah, the first answer, yes, I am familiar and currently have one in place. Yes, I am familiar and exploring implementing a Maquiladora. No, I am not familiar, but would like to learn more, and I'm just not familiar at all. We'll give you about a minute to answer the polling question. As Olivia mentioned, this is how we are tracking CPE, so please make sure you are answering these. I think you need to answer all of them to obtain the 50 minutes or the 1 hour of CPE for today's session. So I will give everyone a few more seconds here. I think we're coming up on a minute. So please get your answers in, and we'll take a quick look at the results in right now. We're going to move the results. So it looks like the largest response group was not familiar but would like to learn more about Maquiladoras. We've got about 20, the next largest group has 28% that have a Maquiladora in place, and then the other 2 are looking to explore and not familiar with 12 and 20% respectively. So to get into the content, I'm going to turn it over to our tax partner in Mexico, Omar Garcia. Omar?
Yes, thank you. And well, it's good to know about this polling because it gives you an idea what information is going to be presented, and it's going to be helping you for all the persons here. So before we jump in the presentation, we will view a little about the IMEX program. And talking about that, we will explain some background about the Maquiladora operations in Mexico. So basically, what happens, the Maquiladora has many years working in Mexico, is back on the 60s. Basically, the Maquiladora started in border towns in Mexico that have just crossed the border between Mexico and US. So now the Maquiladora is not only in the border towns. So you can find Maquiladoras in all over Mexico. And one of the points is that Maquiladora is focused in the majority in the industries on the automobile that is located not only in the border towns. In the center of Mexico, you can find Maquiladoras in southern Mexico. So it is split all around Mexican territory. So the major changes that we have in the Maquiladora regime in Mexico is that basically in 2010, we have a merge of the different programs that we have for incentive the exportation of the products. Back in the 60s, we have two different programs, that is the Maquiladora and the PITEX program, that allows the companies to export the products that they manufacture in Mexico. But after the reform that we have in 2010, basically we just have one incentive program for the exportation of the product that is called IMEX. This IMEX is basically a decree for the exportation of product. So even though your company in Mexico is not a Maquiladora, is a manufacturing company, you can have an IMEX. So basically the IMEX is some license that you need to have it, even though you don't have the qualification of Maquiladora, but you need it if you are manufacturing in Mexico. So basically, it's something that you need to know when you enter a Maquiladora program or you have a manufacturer in Mexico. The other major change that we have on all the Maquiladora and IMEX program is back to 2014 in the tax reform. Basically, this reform is for the VAT. That we will discuss this later during the presentation. Before we have this reform, all the VAT that we have upon deportation was rated at 0%. So basically, we don't have to pay the VAT. Now, with this reform, if the IMEX company doesn't have a VAT certification that allows to have a credit on the importation of the payment of the VAT, you needed to have it paid in front. So basically, those companies that have IMEX program needs to have this VAT certification in order to not pay the VAT. So that is one of the major changes that we have on the IMEX program. We will review this later during the presentation. But in general speaking, this is the background about the Maquiladora. We have new changes that we will discuss also in the presentation. But as I mentioned before, first, in order to you qualify or not qualify a Maquiladora, you need to have an IMEX. So basically, the IMEX and export services industry. So that means that is not only for manufacturing products, it's also applied for services. When we talk about services, and we will describe this, basically what you need to do, and this is the category or different program what we have for different IMEX certifications, is the first one is the controller of companies. Basically, when you have this IMEX program or controller of companies is when you have a holding company that have different subsidiaries that are also maquiladoras or manufacturing companies that have IMEX program, that you have one that controls all the companies in your group. That is one of the programs. The other one is the most common or the most popular that the companies have in Mexico. That is the industrial, that basically this type of IMEX is the company that manufacture products in Mexico. So that means that you import some raw materials, you convert them to a finished goods, and that finished good is going to be exported out of Mexico. The third modality of the program is the services. When we have these services, that means that you have someone here in Mexico. I put this example as always, that we have some clients here that are part of the project that helping you to develop, for example, a software or a service that is rendered with someone in Mexico that is going to be part of a big project that is going to be incorporated and a final product out of Mexico. These services is also included in this. For example, as I mentioned, develop a software, develop a program, or can be a different type of service. For example, in essence, the warehousing on a product is also a service. The cleaning of the product. So other type of services qualify for this IMEX modality. The fourth program that is allowed in Mexico is the shelter. This shelter program is now very popular in Mexico also, because some companies apply for this shelter program that in order that you have a company in Mexico established according with the Mexican regulation, they already have a shelter company that basically holds all your operation on your behalf. So basically that shelter company is going to be making your operation without having you a presence in Mexico or a company that have all the Mexican requirements. So basically, with the change that we have in the law on last year, the shelter program is not only for to incubate some companies that after some years you can start working by yourself. Now the shelter program is going to be for the time that you want to have the maintain the operation here in Mexico. Doesn't have that limitation, but without creating a PE, you can have a presence in Mexico having this shelter program. And the final program that is something related with the other program is where you have an outsourcing companies that they can manufacture products when you don't have that possibility to do it by yourself. So basically, you can outsource that part of the service that you are not doing by your own. So that is the IMEX program that we have allowed to have it here in Mexico. There are some requirements that we can find out here in order to qualify to
Omar?
have this IMEX license. Yes.
Omar, we have a question, and I think it's easy to attend. It's, I don't need a VAT certification if I'm already in an IMEX program. That's the question we have in the chat. I don't know if you can see it there.
The answer, no, sorry, I don't have opened the chat.
Okay. Yeah, the VAT certification it's related with it's not mandatory if you have an IMEX. That's what they are like. If I have an IMEX, do I need to have the VAT certification? The answer is not, right? It's up to you, right?
Yes, it's up to you, but it's highly recommended that you apply for the VAT certification, because that gives you the possibility that you don't pay the VAT upon deportation. And basically, if you exported 100% of your production, it's 100%, as I mentioned, are recommended that you have the VAT certification, because it's going to be a cash flow issue that you pay in front of the VAT and you recover from the government that VAT. So I think if you avoid to do it that, so it's always recommended to have the VAT certification in place.
Yeah, and I think we want to mention about this certification in the following slides, correct? So
yes,
continue more.
Absolutely, yes. Thank you, Jose. The requirement that we needed to apply for this IMEX license is basically that you need to have sales for exportation greater than $500,000, or bid at least 10% of your total incomes to exportation. So basically, that is one of the things that you need to require to apply for the IMEX. The other thing is basically you need to maintain records for your temporary importations. This is very important because it's one of the missing points that we observe in our clients, that they don't control all the temporary importation, and they need to have these controls internally, because unfortunately, as this information needs to keep it in a different software that we call Annex 24, this is very important to maintain it out of the ARP that you have internally to control your inventory. So basically, you need to reconcile both inventory, your information that you have in your inventory internally and the one that you have in the Annex 24. So basically, that is also one of the important requirements that you need to have it. The other one is you need to very fully in compliance, not only in taxes, also in Social Security, that the Ministry of Economy is always monitoring that you comply with all your taxes and labor obligations. And any changes on your structure, name, address is need to maintain also updated if you have to apply for this IMEX. So basically, this is the requirements. We have another question that I want to continue. Does all the import of goods, in my case, food, is considered maquiladora? Yes, food is also considered something that you can import it, but that is going to very depends if it's going to be a maquiladora or not. And that is an important question. You can have an IMEX and you cannot apply for the maquiladora. And we will see the requirements to be a maquiladora. You can be a manufacturer having an IMEX. In some cases, it's not necessary to be a maquiladora, because if you have a manufacturer and you have an IMEX, that means that you can export partially your products, or the other products can remain in Mexico. The difference between being a manufacturer and a maquiladora, basically the maquiladora needs to export it 100% of your production. That is the main difference. So that is very important to have that differentiation between having a manufacturer and having a maquiladora. But in both cases, you can have an IMEX.
Yeah, Omar, and just to complement what you mentioned regarding food, thinking about a maquiladora is like, usually when we're talking about food, it's, like the food can expire, or it keeps alive for a short time. So in my experience, it's not very common to have a maquiladora with that involves food as goods. It's not prohibited, and usually they are located in the border. And as Omar mentioning, he will explain, because one thing is maquiladora, and one other thing is like a contract manufacturer, when you can have these IMEX programs. So if you are willing to have a maquiladora and your goods will be food, I guess it should have a process when you transform. Let's put an example. Maybe it's a vegetable that ends, becoming another product that should be returned as a meal, I guess. So you will need to. It can be done, but so far, and we will see some statistics, are not so common. But now we know that there are many ways to keep the food, fresh. So that's something that it can be explored. Also, Mexico is a potential on agriculture right now. So we have in the center a lot of places where we know that they are growing a lot of raspberries and a lot of vegetables. So that's something that it can be explored and see if it's beneficial to become a maquiladora for that industry. So
that's
all we know.
Thank
I think.
And also,
yeah,
just a final question. A final point. Sorry. We have a company and a client that we see that they haven't buy avocado here in Mexico, and basically they transform to export it to US. But that is not a maquiladora, because they purchase all the avocado here in Mexico and they export it. So basically, it's not a maquiladora. That is a manufactured company that exports 100% of the production. So it's going to be a totally different operation, but in some cases can be a maquiladora of food, but the importation of the food needs to be from outside of Mexico, and they process it and export it. That's the way that the maquiladora can apply on this question. So please go ahead, Jose. Thank you.
Yeah, thank you, Mark. And I want to share some statistics that the Ministry of Economics published regarding the IMEX program that we have in Mexico. As Omar was mentioning, being IMEX doesn't mean that you are fully a maquiladora. Like you can be an exporter or an importer, but not that you are a maquiladora. We will see some examples of the maquiladora because sometimes it causes a confusion on the following slides. But what I want to highlight is, as you can see, most of the maquiladoras in Mexico are located in the border. Baja California, that I would say that Tijuana, the city just next to San Diego, it's full of maquiladoras. As you can see, they have almost 1,000 manufacturing or IMEX companies, that most of them are maquiladoras. I would say not at least 50-60% should be maquiladoras of those 1,000. And going back down is Nuevo León, where Omar and Roberto, who will be speaking there, Omar and Roberto are located in Monterrey office, that is the capital of Nuevo León, that there is also a lot of manufacturing over there. Next country is Coahuila, that is also a state border with New Mexico and Texas. So it's a lot of them moving. But I want to highlight that, for example, Guanajuato, who is like right there on the top 5, it's located in the center of Mexico. So it's not that far. We have a very good highway infrastructure and also train infrastructure. So companies has identified that located also in the center. We have a lot of automotive companies from Asia, from Europe, and even from US located in this section. So the supplier exchange located in the center. And Omar, if you want to comment on that regarding automotive, is becoming huge. We have Mazda, Toyota. There are a lot of automotive companies that are located in this state, and it's becoming, like the main state to looking for investment, especially in automotive and all the supply chains that is involved in this part. So going forward to the next slide, I just want to summarize on which sector these IMEX companies are basically, focusing. As you can see, we put manufacturing, transport, equipment. This all has to be with automotive. Mexico has become a heavy automotive country where we are exporting a lot of production. Most of the exportation, of course, go to the US, but we also have right now exportation to Europe or even Asia and Latin America. So that's our main, industry that we are having regarding manufacturing and maquiladora. Also, the rubber and plastic industry is something that it's very important in Mexico. We have a lot of companies. Also, we have the metallic products, computer equipment, and all the manufacturing industry. We have also having some growing the clothing industry, focusing on brands that are, manufacturing T-shirts, pants here in Mexico and then exported. So as you can see, there are a variety of industries. There is not a lot of food or that you can see here. As I was mentioning, right now it's not something that we haven't seen very common. We have the food industry over there, but as Omar mentioning, the food industry that we have in Mexico is more related with buying the products in Mexico, avocado, because of the weather that we have most all the year, very warm. So we are able to export a lot of food regarding with vegetables, fruits. So most of the industry that you are seeing here is industry who is buying the materials in Mexico and export it. So that's the main industry regarding food, not as a maquiladora, but well, that's important to have in mind, because I think it's something that you can invest, and most of the thinking about cash flow, and exportation of vegetables from Mexico, it's 0% for VAT. They're talking about indirect tax. And most of the vegetables or food that you are buying in Mexico usually also are not taxable for VAT. So you will avoid the indirect tax on that transaction. Of course, we need to analyze item by item, but that would be also a way to invest, knowing that here we have that great weather, as I was mentioning. So I return the word to you, Omar.
Yes,
we have a question. Right?
Very quickly.
Ryan.
Yes. Just point out that the boom that we have in the automobile industry in Mexico is because the OEM that are located basically in the Bajío area. As Jose mentioned, that Bajío area covers part of the state that is Guanajuato, San Luis Potosí, Aguascalientes, that all that area, and also Querétaro, all that area is the Bajío that most of the OEMs are located on that area. So the supply chain, you have all the suppliers need to those OEMs that the product is going to be flowing so far away. So basically, and so fast. So basically, that is the way that the Bajío area has a boom in the last year and is becoming growing on the next following years. So basically, that is one of the points that that Bajío area is very popular now in Mexico.
Yeah, and just to complement Omar, there is an airport located in Bajío, 2 airports that are, due to the investment that they are, receiving, they are very well connected with the U.S. Actually, they even have a flight directly to Japan, as far as I remember, because of the industry that they have. So also that's something that has beneficial the industry regarding, the movement. And just to finish this part, that's something that I always like to highlight. There is a big project going down in the south of Mexico that the government is investing. As you are aware, Mexico, on the south of the country, not in Cancun and all the Caribbean, most between Oaxaca, Chiapas, we call Istmo de Tehuantepec, that is like the thinnest part of Mexico, that the distance between the Gulf of Mexico and the Pacific, it's only about 8 hours or driving by a bus, and maybe by a train is more than that. But comparing with the timing to cross the Panama Canal or even going down there, Mexico has identified that there is a big opportunity to use this part of the country as a similar to Panama. So there are a lot of investment going there. There is already we have 2 ports in the 2 sides of the land. We have in the Gulf of Mexico, and we also have in the Pacific. So there is in construction. We already have a freeway, but it's not that that big in order to be able to cross the country on a smooth way. But this process will be something that it is supposed that 2023 we will have an advance on this project. And being there also as a Maquiladora company, imagine receiving goods from the Pacific and just transform it and export it, in the Atlantic, or even return it in the Pacific, it doesn't matter. So that would be something that the government is, supporting. And I'm totally believe that if this is in place, we have discussed this with our Panama colleagues, and they say that even crossing the canal could take up to 24 hours, depending on the traffic they have. So imagine have the possibility to move merchandise faster, and it's supposed should be cheaper. I am aware that I think crossing a ship on the canal is almost $1 million. So imagine it's something that we are looking at, and Mazars in Mexico wants that we have something. It's something that for sure we want to talk about and share with all our Mazars clients all over the world. So coming back, Ryan, I think there is a survey, right?
Yes, the survey looking at which Mexican state has the most maquiladoras, Baja California, Jalisco, Yucatan, or Nuevo Leon. If you can please fill those out. Again, I'll give about a minute in total, another 35, 40 seconds, to get that in. But obviously, it looks like there's a lot of activity going around, especially close to the border. So those of you who know that your Mexican geography may have an advantage here on this question, but we'll give everyone another 10 seconds. Remember, this is for the CPE, so please respond. All right, advancing to the responses, the overwhelming group is Baja California, which is correct. I think we may have gone back and gave everyone a little refresher after they saw that. So I'm glad everyone's paying attention, and we will move forward now in our discussion of the Maquiladora structure.
Thank you, Omar. I don't know if you want to jump in. Omar, are you there?
Can you hear me?
Yes, Roberto, I can hear you. Can you hear me?
Great. Yeah, well, just to clarify here, the Maquiladora structure, basically, I would like to add something that the Maquiladora is basically a preferential regime stated in the income tax law. We are going to be entering more detail in the following slides. But basically, as we have been mentioning, a company who has established in US came to Mexico and developed their manufacturing activities, and also through this specific regime, they are allowed to come to Mexico and provide the required assets to develop their manufacturing activities, and also provide the inventory required, or the inventory that is going to be transformed, and they are going to continue to be the owners of this inventory. And from the other side, the Maquiladora, which is the Mexican company that is going to be rendering these manufacturing services, the main activity is to provide the employees that are going to be developing this activity. So the complete scheme is that the US company and the Mexican company will be entering in a maquila contract, and then the US company will be providing the fixed assets to develop this activity, and also the inventory that are going to be transformed. And then all the inventories transformed will be coming back to US. And basically, this is the whole structure of the Maquiladora program. However, it's based on
Roberto,
the image program.
Sorry?
Please, Jose, continue.
I just want to summarize, to say to the audience to keep in mind that a maquiladora is, as you can see in the slide, the ability to import, goods, raw materials, or even fixed assets that will never be, owned by the Mexican company that will be the maquiladora. So that allows you to have a temporary importation of raw material, goods, as I mentioned, or even fixed assets to transform, and then make a transformation, a process, and then export it. As Omar was mentioning, when we have a manufacturing contract that is very similar to Maquiladora, but when you have a manufacturing contract, you are importing goods that usually you buy it. Also, the fixed asset is something that usually you buy it also, and then just export it. And what Mexican tax authority is authorizing is if you are buying raw materials that will be at the end exported, as it was asked, it allows you to have, a credit on the VAT, because usually an importation will trigger VAT. So this is a way to help you, on the two scenarios. Also, the manufacturing is a possibility, but maquiladoras is basically when you transform something that is not owned by you, and also usually involves an equipment, a fixed asset that was transferred by the foreigner. Go ahead, Roberto and Omar.
And
I think Omar is already back, right?
Okay. Just to conclude the idea, basically the benefit that will be created to the U.S. company is that even when they are going to continue to be the owners of the assets and the inventory located in Mexico, they are not going to be triggering a permanent establishment in Mexico. And from the other side, the Maquiladora, the benefits and the incentive to develop this kind of activities is that they are going to be generating a minimum tax profit that will be based on a 6.9% of assets or 6.5% on expenses. So at the end of the day, the benefit, the major benefit considering here is the low tax profit generated in Mexico, to incentive to foreign companies to come to invest in Mexico by generating these minimum taxes.
We have a question, Roberto. So I want to go to that question. So the question is, do we have any kind of issue with the new labor law with the employees? Also, please a comment that the voice sometimes hears very low. So basically, Roberto, if you can raise a little bit your voice. About the new labor reform, actually is something that we will discuss in this presentation. Affects the employees because the Maquiladora has a benefit that some of the changes that we have, for example, for the exempt benefit that the employees have are considered non-deductible for tax purposes. So when you are into the Maquiladora program, basically that non-deductible expenses can be deducted according to the quid that we have of benefits for the Maquiladora operation. In addition to that, the Maquiladora also, as we have this labor reform that also affects the outsourcing services, and also needs to comply with something that we call in Mexico that is REPSE, that is a registration for specialized services that you need to ask your supplier when you hire those type of specific services. The other important point that also affects the labor reform is the profit sharing, that we have a limitation in the calculation up to 3 months of salary. So basically, the limitation is that we have to keep the records according with the calculation of the profit shares, according with the law, and these 3 times the salary that we have on the profit sharing. So those are the let's say most common issues that you will see in the Maquiladora on changes on the labor law. We have another question. How the Maquiladora benefit Mexican tax authorities? We will see next in the presentation, and we will answer that so we can continue in the presentation to see the other benefits. So, Roberto, please go ahead.
Yeah, thanks. Well, I will be sharing with you a little bit of the regulations related with the Maquiladora specific regime. As I mentioned, the main benefit for foreign residents is that they are not going to be triggering a permanent establishment related with the relations that they have with Mexican companies that perform the Maquiladora activities, even when they have or they continue being the owner of the assets provided to develop to these activities and located in Mexico, and the inventories that they send to be subject to this manufacturing process. The requirements to be considered as a Maquiladora in Mexico is that all the goods that are going to be subject to this manufacturing process has to be supplied by the foreign residents. And you also need to have a Maquila contract under the IMEX program that is authorized by the Secretary of Economy. And all the goods that are going to be imported has to be imported in a temporary and you need to ensure that all that goods are returned back abroad in the same period. So a third requirement is that all the incomes from the product activity has to come from the Maquiladora operations. Another requirement is that when the transformation or repairing process incorporates additional national or foreign goods that have not been temporarily imported, has imported on a permanent basis, you need to export together with the goods that have been manufactured here in Mexico. And the last requirement is related with the assets that are going to be provided by the foreign residents to develop the manufacturing activities by the Mexican entity. At least 30% of such machinery and equipment has to be owned by the foreign resident. And the other requirement is that for the others machinery equipment that are going to be provided by the foreign resident has not been owned by the Mexican entity that is providing the Maquiladora operation. So the important thing is here that you need to provide at least 30% of the machinery that is going to be used in the manufacturing process. In the same line that the requirement that is related with all the incomes has to come from the Maquiladora operations, also miscellaneous rule issued by the Mexican tax authorities allow us to consider additional incomes as part of the Maquiladora operations. The limitation is that you need to segment these incomes and the corresponding costs in your accounting, and also these incomes cannot exceed 10% of the total amounts of your incomes. And some examples of these other income that are allowed to perform is the provision of administrative, technical, or engineering services, leasing of goods on real estate property. This is the most important: disposals of waste derived from materials, alienation of goods, real estate, interest, and other incentives that can be provided by the Mexican government. During the life of this Maquila program, we are obligated to comply with transfer pricing rules, and we have had different alternatives to comply with these rules. Until 2014, we were allowed to comply through the transfer pricing study based in added cost plus 1% of machinery and equipment, or based on return on operating assets. And until 2021, we were also able to comply through an advanced price agreement, which is basically a negotiation that a Mexican Maquila agreed with the tax authorities, considering a profit margin that they considered based on the economic situation and the activities that are performed by the Mexican company. On these days, we only have the alternative called safe harbor, which is basically based on 6.9% on the total value of the asset used in the Maquiladora operation, or the other alternative is using 6.5% on the total cost and expenses incurred in the Maquiladora operation. The rules related with this safe harbor is basically provides to the company, if they comply with these rules, they are complying with transfer pricing rules, and provide the security for the foreign resident that he's not going to be performing a permanent establishment. So with this compliance, we are going to be avoiding this permanent establishment risk, and also for the Mexican company comply with transfer pricing rules, and the Mexican company and the manufacturing company has to choose the methodology that shows the highest amount of tax profit. I will be sharing with you an example of how the safe harbor is calculated based in a 6.9% on assets. As you know, here in Mexico, we have an inflationary environment, so we have to consider the land updated by the inflation, the average balance on financial assets, the national fixed assets in considering the amount of pending to be deducted, the average of inventories from abroad, also the foreign fixed assets in the same line, the balance to be deducted. And as a result, we will have the total asset value. We are going to apply the 6.9%, and we are going to obtain our base to use it for taxes. And this is an example also for the 6.9 cost based on costs and expenses. I will mention here that it's a common practice in Mexican maquiladoras to estimate based on the operating cost and assets and financial profit, considering a 5% on the margin as a profit. So in this sense, we are going to be considering operating costs and expenses, less the book depreciation, but we are going to add in the tax depreciation. We are going to be considering the salary from abroad, and we are going to obtain the total cost and expenses. We are going to apply the 6.5%, and we are going to obtain the tax profit to be used in the comparison. As a result, as I mentioned, it's a common practice to establish as a tax profit based on the financial information at 5% on expenses. So we have as a tax profit 5%, a financial tax profit, I said, and 5%. But the methodology used as asset base provide us a weighted tax profit that we need to be adjusting to obtain this tax profit obtained by the safe harbor methodology. So we will need to increase our incomes as a maquiladora just to make this adjustment. And just to finalize is basically, even when we don't have the opportunity to apply for an APA during the fiscal year 2022, the last year that we were able to apply was 2021. And when the taxpayers obtain the resolution, this APA will provide certainty during 5 years. We start since 2020 and will be applicable until 2024. So it's something that we are going to be continue seeing in the companies, but we are not going to be able to apply anymore. I will be sharing the microphone with Erin.
Roberto, before jumping, Erin, there is a question regarding does the 6.9% of the assets computation includes both assets provided by the foreign resident and the assets provided by the maquiladora? I don't know if you can attend.
Yeah, that's correct. That's correct. We need to consider both assets provided by the foreign resident and also the maquiladora, the owned by the maquiladora.
Thank you.
Okay, so let's talk about transfer pricing. Here we go. Because of the changes in Mexico's 2022 tax reform, if you operate under a maquila structure, you need to review your transfer pricing policy and your transfer pricing documentation for your group, not just for Mexico. And this is important even if you have been using the safe harbor method to set your intercompany prices, and we'll see why on the next slide. But if you've been setting your intercompany prices according to terms set out in an APA or according to the economic results as found in a transfer pricing study, you'll need to adjust your intercompany pricing to comply with Mexico's safe harbor rule. like we just saw in the prior slides. When you do this, you'll also need to consider the entity on the other side of the transaction, and you'll need to consider its transfer pricing results. This change to the safe harbor rule, it may give you results that don't comply with the arm's length standard for the other party in the transaction, and this could create a double taxation issue in the country where that entity operates. This won't be a problem if the other entity in the transaction is located in the U.S., but it could be a problem if that entity is located elsewhere. So the 2022 tax reform also lists some new, or some really not so new requirements for transfer pricing documentation. The first two bullet points here, they're not really new. They would basically be considered best practices for transfer pricing in most countries already. So your transfer pricing documentation, it needs to be complete, and your reports in all of the jurisdictions where you operate, they need to tell a consistent story. The documentation should include a complete description of all of the relevant entities, including the functions they perform, the assets they may own, and the risks that they assume in the covered transaction. Also, if you make any adjustments to the financial data used in the economic analysis, you'll need to provide support for those adjustments and explain why those adjustments lead to a more reliable analysis or more reliable results. So the message here is really that your transfer pricing documentation should thoroughly present the facts and circumstances related to the covered transaction, and any choices made for the analysis should be explained and supported. The next change is in the rules. It's an actual change. We typically look at 3 years in an analysis. We use the 3-year weighted averages. Because this tends to smooth fluctuations from business cycles, and it should also reduce the impact of a year with unusual results. The changes in the tax reform, they now call for single-year analyses unless you can make a case for including more than 1 year. And finally, it shouldn't be too much of an issue because most countries accept the use of an interquartile range, but now that is the convention that's going to be required in most transfer pricing analyses now. The key takeaways for transfer pricing, I guess, from these tax reforms would be pretty general, and they would apply really not just to Mexico, not just to the U.S., but to any country. And it's that transfer pricing documentation is only becoming more important. And so the SAT expects your transfer pricing documentation to be done well. They've always expected it to be done well. But it's just becoming more of an item that is it's discussed more and it's scrutinized a little bit more. So, and this is a trend that we're seeing in most countries now. But now is really the time to review your transfer pricing documentation. Make sure that it's detailed, make sure that it's complete, and it needs to be compliant with the changes in these new rules. So now Tim is going to cover some items related to international tax issues.
Thanks, Aaron. So I'll keep this brief since I know we got more slides and definitely a couple of polling questions still to get to. But I guess, the most important thing here is that even though the U.S. company won't be considered to have a permanent establishment based on the Maquiladora structure, there is still ownership, legal ownership of an entity in Mexico. So 5471 CFC reporting or 8858 reporting is going to be required. So typically the Maquiladora entity is something that you can check the box on to treat as a branch. And either way you go, the CFC or branch route from a U.S. perspective, you would have expect creditability of foreign tax credits. One sort of side bonus that I think is worth mentioning is, as a result of the changes to the sourcing rules in the TCJA for Section 863B, the sales of the products manufactured by the Maquiladora by the U.S. company will generate foreign-sourced income. So this is a structure that if you have excess foreign tax credits in the general basket, maybe, for example, from repatriation of 965 toll charge, or any other reason you've got excess foreign tax credits in the general basket, this structure can help with generating foreign-sourced income to unlock some of those foreign tax credits. So, just the important thing is to keep in mind, even though no PE for the U.S. company, there is still U.S. reporting involved with this structure. And with that, I will pass it on to Roberto.
Thank you, Tim. And following up on the next slide, there was one question that I just want to highlight, that what was the benefit for Mexican tax authorities, right, about this scheme? As we already mentioned, of course, there is a taxable event for maquiladoras regarding, of course, it's not that high. We were mentioning 6.5 or 6.9 over the operation. But also, this has, at the beginning, this was created, to have workforce and employment in the north of the country. But right now, also Mexico identified that this has created, a big industry. As I was mentioning in the beginning, the workforce of Mexico, specialized in the automotive industry, is very well qualified, and many of the constructors are, turning around to Mexico to open a fabric or being a part of the supply chain. And this because we have a very qualified people working, in the manufacturing. So that's also something that has helped to have, well-paying jobs. Actually, there is an initiative to also equalize part of the salaries and wages according to the new NAFTA rules. That is something that is in place. That also it will be good also for the workforce in Mexico, not only thinking about cheap workforce, at the end is qualified, and at the same time, we are becoming experts on the industry regarding of the activities that we are carrying forward. Also, what other incentives do you have in Mexico if you have a maquiladora? In Mexico, we have a big impact in the 2014 reform where payments to employees that were considered an exempt income from the individual, it's considered as not deductible by 47%. So maquiladoras doesn't have this treatment. Mexican tax authority is given the possibility to deduct 100% of the payments or fringe benefits that you pay to the employee. Comparing with other industries, this is not applicable for manufacturing entities, only maquiladoras. So that is something that is a benefit because maquiladoras has a big cost regarding workforce. So the limitation of this, incentive was something that could cause to have a high impact on the corporate tax on Mexico level. Also, there is an allowance regarding VAT. When you have a maquiladora, you have the possibility to transfer the finished goods in Mexico to another maquiladora in order to don't export it and then bring it back to Mexico, because this is also considered as part of the production chain. So there is an allowance to do that, and for Mexican tax purposes, when you transfer this merchandise to another maquiladora or IMEX, it is considered as an exportation. But the VAT law was triggering a VAT withholding on this transaction considered as a disposition of goods that was carried out in Mexico. So a VAT was, triggered, but at the same time withholded, because it was supposed that this merchandise is owned by the foreigner and not by the Mexican entity. So there is a provision that allows to avoid this withholding as long as you are part of the maquiladora and you are, inside the industry. So this withholding will not be triggered. There is another question, Ryan, if you want to jump in.
Thanks, Jose. We've got a quick question here. The tax incentives for maquiladoras, the additional deduction of the non-deductible 47% of payroll. immediate crediting of the VAT in the retention of residents abroad, and the reduction in the number of non-deductible items, or all of the above. If you can please get your answers in as quickly as possible. And I know we are right up on the hour. I think we only have 2 more slides to get to the last question, the last polling question, which covers, the majority of the information we want to get to. So I'm going to close this poll in 10 seconds, and then we can get to the next couple slides and the final CPE question. So I'm going to close out right now. We've got 100% of the people with the correct answer of all of the above. Thank you, everyone, for listening in. And here we're going to go to the VAT certification process and then the benefits of the VAT certification. Jose, was that to you?
Yeah, it's Omar. Omar, are you there?
Yes.
Okay.
So basically, we will talk about the benefits of the VAT certification. As we explained during the presentation, and I'm gonna go a little quick, we are on timing, is basically the VAT certification allows you to not pay the VAT and give you this credit basically to defer the VAT payment until you maintain this VAT certification. It is hard to obtain this VAT certification because at least with that we are seeing nowadays with our clients, it takes time to get it, but as soon as you have it, you need to maintain it. And one of the benefits, as I mentioned before, is that benefit that you don't pay the VAT upon deportation. So the other important thing when you have this type of VAT certification is if you are having some companies with an IMEX service program may change its regimen from temporary to permanent when you import parts and components that we transfer to another company that is in the automobile industry. So that is on another part of the benefit. And one of the other things is when you have also automobile part companies that are able to record inventory, the merchandise that they sold companies in the automotive industry can be also included on the manufactured final product that can be exported or remaining in the country. That is something that the OEMs give you to the Maquiladoras that we call CPMs. So that is another benefit that we have on the VAT certification. Moving forward to the presentation and have final comments on this, and we have a poll.
Thanks, Omar. We've got the final polling question. So what are the benefits of the VAT certification? That's not applicable to imports. Companies in the IMEX service program may not change the regime from temporary to permanent for temporarily imported parts and components. Auto part companies will be able to record their inventory, control, and merchandise that they sold to companies in the automotive industry or the manufacturing of motor transport vehicles, or all of the above. Please get your answers in for CPE credit. I think we're going to wrap up the webinar after we close this poll. So thank you everyone for joining. I think the slides are available for download. If you have any questions, please don't hesitate to reach out to any one of the presenters. And we'll be happy to connect with you and see how we can assist in your Maquiladora structuring and benefits opportunities. So I'm going to close the poll here in about 10 seconds. and we will do a quick wrap up. It looks like I've got just about 100% of the attendees answering the poll, so I'm going to close right now. The majority answered all of the above. That is incorrect. The correct answer is, I guess, what would be C. The auto part companies will be able to record in their inventory control the merchandise that they sold to companies in the automotive industry or the manufacturing of transport vehicles. So with that, I'm going to turn it back to Olivia for the final housekeeping announcements. And again, if you have any questions, please don't hesitate to reach out to anyone on the panel today. And thank you all again, Olivia.
Hey everyone, thank you for joining. So again, as he said, the deck is available to download, but this slide will get into how to download your CPE certificate. So we hope you enjoyed today's webcast. If you've completed CPE requirements, your certificate will now be available for download. You'll see the instructions on the screen. As Ryan said, feel free to reach out to any of today's presenters with any questions. Thank you once again, and enjoy the rest of your day.